You know, day trading, it's got this incredible allure, right? The thrill of the market, the idea of making quick profits, maybe even achieving that financial freedom dream. But what if I told you the biggest risk isn't actually making a bad trade? What if the real danger, the one that can truly wipe you out, is hiding in plain sight, on your tax bill? We're about to unpack a story that sounds like a typo, but it's a very, very real nightmare.
So let me just ask you this straight up. Does this sound possible? You have a good year, you profit $200,000, and then you get a tax bill for $2 million? It sounds insane, right? Like there's no way that could actually happen. Well, it can, and it did. $2 million. Just let that sink in for a second. And this isn't some random number we pulled out of a hat for shock value. This was the actual, real-life tax bill for one young day trader. Let's get into the story because this is seriously alarming.
Yeah, so this is a quote from a real firm that got this call. A 24-year-old kid who thought he was absolutely crushing it. He'd made 200 grand, but instead of celebrating, he was facing a multi-million-dollar tax liability. So the question is, how is that even possible? The answer is buried in the rules of the game itself.
Okay, so you know the day trading dream. It's all about speed. It's this high-stakes strategy of buying and selling stocks, options, whatever, all within the same day. The whole point is to lock in those small, short-term profits and then just do it over and over and over again. And look, it can be super lucrative for pros, but for newcomers, there's a big catch.
And this, right here, is the part that almost everybody misses. You get so focused on learning the market, right? Picking the right stocks, getting your timing just perfect. But the most devastating financial punch can come from a direction you weren't even looking: the tax code. And it all starts with something called the wash sale rule.
All right, welcome to the wash sale trap. This one, single rule, is pretty much the main reason our 24-year-old trader found himself in such a huge mess. It's a rule that's actually designed to stop people from gaming the tax system. But for an active day trader, it becomes an absolute minefield.
Okay, so here's the official definition. A wash sale happens when you sell a stock for a loss, and then within a 61-day window, that's 30 days before or 30 days after that sale, you buy back that same stock or something the IRS considers substantially identical. And that can be tricky, right? It could even mean buying an option on that same stock. Now, let's break down how this actually works. It is a frighteningly simple three-step trap. So imagine this. You sell a stock, and you lose $1,000. Bummer. But the very next day, you think, you know what? It's a good price. I'm getting back in. So you buy that same stock back. Boom. You've just triggered the wash sale rule. And the consequence? The IRS basically looks at your return and says, nope, that $1,000 loss, it doesn't count.
And this is the absolute key to the whole nightmare. For tax purposes, that loss might as well have never happened. So all of your gains, every single winning trade, is counted as taxable income. But any loss that's part of a wash sale, it's disallowed. It gets completely erased from your tax return. For a day trader making hundreds, even thousands of trades, all those little disallowed losses create a giant phantom income. Your brokerage account might not be growing much, but on paper, your taxable income is exploding. And don't think you can get clever here. The rule is airtight. You might think, okay, I'll just sell the stock at a loss in my main account, and then I'll just buy it back inside my tax-free IRA. Nope, the IRS is way ahead of you. That is still considered a wash sale, and that loss is still gone. But wait, as if that wasn't bad enough, there's more. Even if you somehow manage to perfectly dodge every single wash sale, day traders still face another huge tax hurdle. And this one is all about how your profits get classified by the government. This slide really lays it all out pretty clearly. See, a long-term investor, somebody who holds a stock for over a year, gets to pay a much lower capital gains tax rate on their profits. But a day trader's profits? Oh no, those are typically taxed as regular income, which for most people is a much, much higher tax rate.
So let's connect the dots. Even when you are winning, even when you are avoiding the wash sales, a bigger slice of your profit is going straight to Uncle Sam compared to a buy and hold investor who made the exact same amount of money. It's a brutal 1-2 punch. Your losses don't count, and your gains are taxed at a higher rate.
So after hearing all that, you might just be thinking it's totally impossible. But there are ways that serious professional traders try to handle this tax minefield. And just to be super clear, this isn't financial advice, but it is important to know that some options do exist. Okay, so one path is to apply for something called Trader Tax Status, or TTS with the IRS. This basically classifies you as being in the business of trading. But the bar for this is incredibly high. You have to prove your trading is substantial, continuous, and regular. For many, a simpler route is just to do any day trading inside a tax-advantaged account like an IRA. That can help you sidestep a lot of these specific tax headaches.
When you boil it all down, it really comes to this one crucial takeaway. Day trading isn't some casual hobby you can just dip your toes into. It is a professional's game, and the price of admission isn't just having the money to trade or knowing the market, it's having a deep, deep understanding of these serious and very hidden costs.
So, the next time you hear one of those stories about incredible overnight gains from day trading, I want you to remember the story we talked about today. That promise of quick profits is powerful, I get it, but now you know about the hidden costs. The real question is, are you truly prepared to pay them? Thanks for tuning in.